So we are live, folks. We are live. All right. So gonna be doing a little trade recap for the month of March in 2024. All right. So let's give a little background. I was actively in two prop firm challenges. One was TFT, 100K account, got scammed. TFT just ceased operations for an unknown amount of time. So I'm just gonna continue with the belief that the money I paid for that challenge is probably gone, which isn't too much. And then I'm still in an FTML 50K challenge. So these two trades were placed on both, but TFT, who knows? Because I can't even get into that DX trade account. But so to start off first, we had EuroCAD, right? So I do all my chart work. Hold on, let's move this. All right. So I do, damn, bro, it's technology. Let me get rid of this shit, bro. All right, whatever. So I took some. I sold EuroCAD to start off. First of all, I do all my chart work on the 4 hour pretty much. And what I look for are three simple things. Over here, the first thing is a liquidity sweep. And so liquidity sweep, when any former high or low gets swept, and then to prove it's a liquidity sweep, I need to see a impulsive, big, meaty candle in the opposite direction to prove that it was a liquidity sweep. Because just if a high gets taken out, but it keeps going higher, it's not a liquidity sweep because price is still moving higher. We need the market to tell us that we're changing directions, right? And you can see this worked out well, but I'll get into why I didn't hold this trade. So the first trade, right? I'm noticing EuroCAD takes out this side, gets real choppy. These candles are real small with no real big imbalances. So I'm kind of expecting price to retrace because we also see a big move up for most of February. So it's kind of normal to assume price goes up, down, up, down. So if it's been going up for a long period of time, it's normal to see some retraces. And this is like a little like the character of this price action kind of made me think that price was going to reverse and travel further down. So as we see, I see sweep here, then boom, huge break of structure. This could be seen as a significant low, depending on who's looking at the chart. But for me, this was significant enough because created a fat fair value gap right here. So basically, when I see the first two steps get checked off, liquidity sweep, break of structure, then I take my little fib tool, if you see right here, I take my little fib tool and I basically just enter on a retrace. Pretty simple. 71% retrace and 79 I have. So I usually enter off of the 71 just because a lot of the time the 79 gets ignored and price will just retract to where I think it's gonna go. So price break structure and I see it retrace. So I draw out the fib and then I enter at the 71% level, right? Price just fucking just accumulating here, accumulating, right? And then unfortunately, I sold this for around a 0.61 R profit. So I risked $1 to make 60 cents basically. But in my challenges, I was risking 2%, right? So on the FTMO, that's $1,000. On a 50K account, 2% risk would be $1,000. So I was in this trade, 2% in this trade, and then I was also had 2% risked in a AUD USD long. The reason why I sold early on this is because I realized the daily drawdown rules with prop firms are so scummy because it's equity based, it's not balance based. So if you're floating a couple percent in profit, and then you see like a sharp retrace, like back to your entry or back into drawdown, you might violate your daily drawdown, even though your trade hasn't even been like stopped. You're stopped out. Like you can still be in profit, so you have 2% risk, and then you're 3% in profit. If price retraces on both on trades you have, that's over a 5% drawdown violated. You're done. Count's gone. So I got kind of scared and I ended this trade early just so I can stay in and deal with that daily drawdown on the other pair. I'll get into that trade later, but on this on this on this trade, I mean, I can't really complain too much. I wouldn't have gotten stopped out here, maybe depending on spread, but this looked healthy, especially at 9 o'clock in the morning. Spread's usually pretty good in New York session. So if I held this trade, my normal TP would be around 2.45, the low that created the swing. So this is a leg right here. This high to this low, that's one leg. This is the leg that's making me think that the market's going to go down. So I see price retract into my entry level and then fools around with me a little bit, but then I see it sell off. So this trade would have been a two and a half RW if I held. But I can go. You guys don't think I'm lying. You can go and you can see I sold it right here for a 530 W. So I only made $530 off of my $1,000 risk. So all in all, like this was a good trade. I recognize that the the character in this price action was shifting and that price was ready to go down. And if I held all the way down to the lowest point, it's a 5.6 R. So I predicted a 200 pip move. And for me in my journey, this is good to see. I'm starting to pick it up, starting to recognize when the patterns are shifting, when the character is shifting. So that would have been a W, but still was a W. But then let's get into my next trade, right? This is where I get a little salty. All right, here we go. So I got stopped out today on this one, this morning. Let's take this off. So I entered this and that the Euro CAD trade around the same time. So over here, right? Look at these equal lows. Perfect. There's residing money right here. Retail traders see these lows and use this as support. So what institutional big traders will do, they'll push price down just to activate all those stop losses, and then you'll see a big energetic move upwards. So do you see how you see all these lows right here? This is exactly what I want to see. Equal lows get made, and then a sweep of these lows, and then a huge move up. On the 4 hours, this is pretty significant. This tells me that price wants to go up, basically. We can see price already broke this high. It's in a downtrend here. This is a high that made this low. Price trades above it, and it doesn't continue down. It trades up, higher low from this low. So this is the lowest low. This is a higher low. So you can see that market is now beginning to form an uptrend, right? So this hit all my criteria to enter this trade, basically. Sweeps, break structure, this structure point, even these highs over here dominates all of them. Then starts retracing. I'm ready to enter. Again, 2.45 R. Take profits always at the high of the leg. Stop loss always at the low of the leg. So when we enter, immediately price messes around a little bit, but then I see a huge push up. And this is where I have to get better at managing the trades. Because in my head, I feel like having a set stop loss and TP could work. But for swing trading, what I'm doing, if I have a set stop loss and TP, like this is a perfect example. I was in this trade from March 18th all the way till April 12th. And then if I have 2% risk in a trade like this, I'm not comfortable taking on more risk in any other trade because of that daily drawdown rule. If this trade, like say I had two trades open, right? At this point. So 54 pips is $1,000. 54 pips is my stop loss, right? Right here. That is equal to 2% of my account. Let's go here. So measure this to here in one day, 150 pips. This alone could have violated my daily drawdown rule because I was 54 pips. Let's see, how many pips was I in profit? Or it doesn't even matter. My equity at this point went down 150 pips divided by 50. That's 6% of my account. Think about it, because 2%, $1,000 is so confusing to explain. I have to get better at talking, but that's all right. So 2% of my account is $1,000, and $1,000 is 55 pips. Price drastically retraced 155 pips, which is about 6% of my account. That alone would violate my daily drawdown. So that's why I'm kind of not comfortable risking 2% in two trades at the same time. I know it's rare for both pairs that I'm trading, especially if they're uncorrelated pairs. It's rare for both of them to make a sharp move against me like that. But still, I'm not trying to be in these challenges and then lose these challenges and this money for a stupid rule like that. If it was balance based, it'd be a different story because then I have to actually hit my stop loss on like if I would need a 3%. If I would actually need to violate my stop loss 5 times or 3 times if I have a 2% risk on a trade. I'd have to violate 2 or 3 of those kinds of trades by stopping out. But the fact that it's equity based, because my account could be at like 54,000 here, then boom, down already to back down to 52,000. That's over 5%. Like it's sketchy, man. It's sketchy. But this trade just didn't work out. It's all right. This still was a good trade in my eyes. My rules were met. Sweep, broke structures to upside, retraced. You can see it was respecting my entry point because we saw it respect it. Look, it was holding for a while, got really close to stopping me out. Boom, went up again. This is where I realized later on. You see all these equal highs right here? 1, 2, 3, 4, kind of. This is like the liquidity I'm talking about. I should have reduced my TP to these highs over here. I know I would have taken out my original risk to reward for the trade was a 2.45 and it'd be reduced to 1.7, but it makes the trade a lot more likely to take profits. And what are we in this game for? To take profits, right? So I should have seen these equal highs and be like, okay, the market makers are engineering a level of liquidity at these highs. So if price pierces these highs, it is very, very possible for what just happened to happen. This is a whole other trade, right? These highs get taken, that's a sweep of liquidity, and then it breaks structure here. So I would put my fib here, and if it retraced to this level, that's another trade. So I should have recognized that a trade for the opposite bias was playing out in a trade I still had open. And another thing is I closed that Euro CAD trade right around this point. I was pretty confident that AUD USD was going to take out my TP up here. So I kind of wanted to take the risk off of the Euro CAD trade and let this one run out to hit TP. But thinking back on it, I should have just taken profits here because that's such a healthy amount of profits already. That would already been over 3% gain in my account if I take profits here because I had 2% risk already. So this would already been a healthy amount of profit. And then I could have let that Euro CAD trade. Where is it at? I could have had that Euro CAD trade play out. But this is all in hindsight, so that's actually I took profit on this trade around this day right here, March 20th. Then AUD USD, look, March 20th. I thought that this trade was gonna go and keep pushing higher to take out these highs and continue its trend upwards, but it just didn't work out in my favor. And that's okay. That's part of the game. I can't be emotional when things like this happen because this is just part of the process. I am at the stage in my journey where I am not losing money on these accounts, but I'm also not hitting that like crazy, those crazy gains. I'm like consistently hovering above break even and I'm slightly profitable. So I had the 50K account with FTMO. I've gotten close to that 10% take profit, but then I'd hit a loss here, a loss there, bring me back down. So now I'm sitting at around 2% gain on the account, and then the obviously the goal is 10% to pass phase one. Then phase two is only like 8 or 5%, and that's very doable. That's one trade with 2% risk. That's one trade, and I passed the account, passed the challenge. So moving forward, what am I gonna do? I need to think about how I'm going to manage the trades in the future and whether or not I'm gonna trade each challenge account the same and take the same trades on each challenge account, or risk like 2% on one and then risk 2% on another challenge account, but with a different trade with pairs that aren't correlated. Because overall, if I'm trading like two accounts, 2% on each account, that's 4%. So if I'm wrong so if one trade doesn't go my way and I get stopped out, that's 4% of my total challenge equity going down, you know? And I feel like, especially when I'm funded and I have these accounts, I think the smartest way to go about it is trade each account individually so that if I'm up a trade on an account, so say I'm up 2.5% on an account, then I would just leave that account with the profit in it, and that's guaranteed money for the month, and then move on to my other accounts and trade those accounts. If any setups appear, I trade the next setup on the other account. Then if that trade works out, keep that profit there, and then go on to another account. So those are my plans going forward in terms of risk management. In terms of my strategy, I'm pretty confident this is what I'm gonna do. This 4 hour kind of ICT, SMT. Um, this is basically the same model used in his 2022 mentorship. It's the liquidity sweep, breaker structure, retraces, the OTE entry. There's a lot of what's it called, models ICT has, but this is the one that has stuck with me and makes sense to me. But I think that I'm on the right path. I'm being patient. I'm not over trading. I'm not making a lot of the same mistakes I used to make. But it's just frustrating when trades like this happen. I'm close to TP how many times? One, two, three, and then a reach, a fucking crash down to my stop loss. And another thing is, I don't know what to do in terms of how long I should hold these trades. Should I only have like a week limit? So what once a trade has been playing out for over a week, should I look to exit out of that trade just so I can enter more opportunities? Because were a lot of opportunities I missed, like in Euro JPY, for example. This was a loss I took, but if I was patient enough and wasn't involved in any other trades, this is another beautiful short right here after my failed long. So you see a liquidity sweep here, break of structure. I'm kind of just playing this as a continuation play. This probably looks so confusing to all you guys. But there's a liquidity sweep here, break of structure. So I'm basically just playing like a normal market continuation play, expands, retrace, expands, how a normal market moves. But as you can see, price takes out this high over here, takes out, and then it breaks structure. this low right here. This low that created this high got violated with full body closes with fair value gaps. So this should have triggered in my brain that like fuck this play. This is the play I should be involved in. And look at how beautiful this is. March 4th, in 5 days, in what's it called? 6, 7 days, this trade would have worked out. But again, all in hindsight. But this is just an example of what a winning trade would look like for me. Sweeps this high right here, break structure, retraces, simple, 71% entry, right into this fair value gap on that black candle right here, and then boom, continues down. And then price continues. So for right now, I'm just going to check all of my pairs and see if there's any setups that I'm interested in. Euro USD, nothing here. NZ USD, nothing here. What a possible play could be, it sweeps this low, right? That could be a liquidity sweep. And then impulsively, if price impulsively moves up, takes out this high, then I might be interested in entering a retrace that would look something like that. So boom to here, and then that's basically my whole trading model. This could get you rich. This could get you rich. This will make me rich. Like, look, this is the model. So sweeps this low, break structure, price, I'm assuming, wants to go higher. And this isn't 100% win rate because nothing is. So if you see any shit on YouTube that says 100% win rate, become a millionaire in 10 days, cap. This is a strategy that can net you, if you're smart with your risk management and managing the trades, you can make 2-3% a month, even 5% a month if you do it correctly and if you develop that intuition edge. The edge isn't just this pattern that I showed you guys. It's the edge is in me recognizing the pattern and me managing it in my own personal way. Because this is a very popular common setup that a lot of people use, you know. So AUD USD, no setups. I would have been interested in actually taking this short, but price continued moving down. So now there's no setups. It's too far extended down. Same thing with this. I would have been interested right here to enter here on a retrace, but price kept pushing down. No biggie. No forcing anything. Right here, I would have also been interested in this. I was looking at this right here. So this would be a sweep. This would have been a sweep. Break of structure here. And then I would take the trade right on this 71% level. I would have taken a trade at this 71% level, but price didn't come back to my entry point and continued to push without me. So this trade is chalked. Not today. To Euro AUD, nothing here. Nothing here. There's something here. This could be a possible trade. Swept these highs, broke structure here and broke structure down here. But I feel like these kinds of trades don't really work out too well because like this is a new leg in itself, right here to here. Because this low is lower than this low. So this kind of makes me uneasy because this is a whole other leg. So I'd be more interested in taking a short right here. I'll keep that flag, actually. This looks pretty good. But again, this could be also a liquidity sweep and a push higher. So When I'm confused like that, I'll hop into other time frames just to help things get more clear. Oh, and here we go. So you see right here, fair value gap right here, and then price is respecting this this imbalance. So this kind of makes me think that price is trying to push higher. So I would probably think twice about entering a short on this. I forgot that's why I had it unmarked. Wasn't comfortable with that. Nothing here, no visible sweeps or anything here. If we look though, this also could have been another opportunity. Sweep this sweeps these highs right here, and then these lows. You could say that's a break of structure, retraces, and this is another winning trade right there. But like I said, I was already involved in a 2% risk. I already had 2% of my account in a position, so I wasn't really comfortable taking on any more trades just in case of a big retrace violating my daily drawdown. So nothing there, nothing here. Yeah, that looks too messy for me. Nothing here. Nothing really here either. This could have been good. This could have been good if price didn't come back up here. If price kept moving, and so instead of building support here, if price just pushed down and broke this support convincingly, like a move like that, and then retraced, I'd be very confident in this trade. But the fact that price stalled right here, reversed up a little bit, and then came back down, that's not the kind of price action I like to see. Similar with this, it's this like here to here is a new leg. I want it to be one leg like this, if that makes sense. I would want to see price go from here, break, go all the way down, just straight black, straight black. I want to see straight black, impulse candles down, and then a retrace. We don't want none of this stuff right here. Same thing with here. Nothing really interesting here. Already showed you guys this. Nothing here. EuroCAD, nothing here. This is really ugly. This is why 99% of traders lose, is because traders will feel like they're forced or they kind of have to make trades. I am I have built my discipline and patient muscle enough to where I know to not get involved in this kind of shit, bro. There's no money to be made here with my system. When I see some shit like this, boop, on to the next one, right? This could be D's here because any chart that I see with big candles like this shows momentum. So kind of shows me that price is trying to go down. But again, there's no real, these don't really count as real lows to me. Like this is the low that would have to get taken out. And this is so far away. The trade would be like a week. It would take months to play out. Here, this is a possible incoming trade actually right here. Let's see if you guys can see what I'm seeing. So this is the swing high. This is the swing low. Price swept these lows, and you see how there's a fair value gap forming. If price can just manage to push past this high and then retrace back in this fair value gap, I would be comfortable, rather confident to take a long here. And I'll just point it out for you guys. Boom. There you go. That's another possible trade. But this is why I love the 4 hour time frame. Let it have I have hours. I don't have to be a slave to the charts and sit on here to watching these 15-minute candles stressing. Each candle's 4 hours, bro. I can sit and chill and just let this shit happen. Forcing it ain't gonna do shit. And there you go. Those are all my pairs. No real trades I see happening anytime soon, which is fine, you know. All you need is one winning trade a month, two winning trades a month, and you're rich. It's just a matter of building your capital to where 2-3% gains a month is a hefty amount of money. It's enough money for you to live off of. If you have a $10,000 account, 2% on that is bullshit. It's nothing. You know, you need to have a lot of money to make money in this kind of this kind of avenue. You can't just come in with $100 and expect to flip it to 1 million. It's not realistic. It's not sustainable. It's possible you can take $1,000, right? And you could fucking take that $1,000, risk it all in one trade, and with my system, you would make 2,500. But one loss and you lose half your account, and this isn't a 100% win rate. So it's just like an odds game. It's an odds and risk management kind of game. But I actually enjoyed making this video. This kind of forced me to look at all my pairs and analyze them and kind of explain what I'm trying to do. Because when I explain it, I understand it more. The more I explain it to myself or to other people, I'm just gonna pretend people are gonna watch this. But the more I explain it, the more I understand it. And that's all it's about. I have to become a master at identifying this pattern and then a master of managing it in a way where I can actually make money out of it. Because everyone has access to this kind of information, to this kind of pattern or this kind of setup, but very little can actually figure out a way to make it profitable for them. Because if you take the wrong trade, you take the wrong setup, if you have too many trades on and you violate some drawdown rules, you're not making money. You might be making money like a demo account, but it's completely different when you have real money into it. When you have prop firm rules, completely different game. But I think that'll wrap it up for this video. Just summarizing 2 trades this month in March. AUD USD long looked good, went against me in the end. Lesson learned. Lesson that I learned was probably manage it better. And if I see that it's taking a long time to play out, just take any profit I'm comfortable with, because there's a time value with money. The longer I'm involved in a trade, it's the longer the amount of time I'm not involved in other trades that I could have made money off of, you know? So that's the lesson learned with this one. With the Euro CAD, my second trade. Where's CAD at? Here. With this trade, the lesson that I learned was probably just let it play out, I guess, because this was a winner. This was a good trade. Would have if this trade hit, I would have passed phase one on my accounts. So this trade is unfortunate, but I'm happy. I'm happy that I didn't risk it and keep this on while I had the AUD USD on, because I could have violated my daily drawdown and lose my challenge accounts, which I paid my actual money for. So all in all, down on the month. How much am I down on the month? So I made 540, lost 1,000. Wow, net closed. Wow, how is it 200 more net closed than closed? Wow, those are surely some outrageous fees or transaction costs, I guess. Wow. But yeah, all in all, not too disappointed. I did the right things. Only lost only lost 1% of my account, still up 2%, and chugging along. Gonna get that $55,000 account, 10% gain. Pass phase one. Phase two will be easy. Funded account. There we go. But I hope if anyone watched, they enjoyed, got something out of it. I want to start posting more videos because I feel like it's important to know that there's others like you on the journey, because I know there are a lot of other traders in my shoes who aren't profitable, like sort of say, but they're not unprofitable. They're not losing they're not blowing accounts. Like they're just like they're in the mud. You're in the mud right now. This is the part of the journey where you start thinking, "Oh, I don't know if this is possible. I don't know if this is possible." But you start seeing some success, which keeps you in it. And that's the most important thing, just staying in it and seeing other people be in the same situation you're at. It kind of keeps you in it. It keeps you motivated, and you know, like, oh, I'm not the only one. Like there's tons of people in my shoes who will one day make it. The only thing that would stop them from making it is if they quit and they stop putting the work in. Like simple. But if I taught anyone anything, if I taught anyone anything, you're welcome. This is mostly just for me though, to go over my trade. So I have like kind of like a catalog of recaps because I need to start going over this shit more. I already journal my shit in a journal right here, but I just finished it actually. Every page trading notes. But yeah, I think the videos will help me more because it's way more visual. I can't really explain everything with words on paper, so but I'll end the video here. See you guys later.